راح استعرض معاكم إن شاء الله السيلبس مرة أخرى. بالنسبة لمن يسأل عن الأخ أحمد الضبيب يسأل عن الحضور، ترى الحضور يؤخذ أوتوماتيكلي. كل من يحضر نفس البلاتفورم تحضرك. في حالة أنا راح أتكلم عنها إن شاء الله الآن في السيلبس، فاعذرني بس خليني أمر على السيلبس، وإن شاء الله إذا وصلنا لمسألة الاتندنس أنا راح أشرح. الكورس as you know it's essentials of investment finance 220. It's an introduction to investment, or it's an introductory course for investment. There are several objectives for this course. The main objective is to have an introduction or a basic course for investment. So we will be touching on several important and basic concepts relevant to investment, such as buying and selling securities, what different types of securities, the concept of mutual funds, why do we have mutual funds, benefits, drawbacks of portfolios or funds in general. This will lead us to an important concept, which is diversification. What we mean by diversification, why it is very important in investment, etc. We will also talk about stock markets types, the different types of stock markets, spot versus futures stock market, primary versus secondary stock market. We will also talk about evaluating different types of investment, such as common stock, preferred stock. What are the important elements or component of common stocks? We will also talk about stock price behavior and market efficiency. This is an important topic. Why? First, what we mean by efficiency. When do we say the market is efficient, or we say that the market is inefficient? The role of information, new information, old information, what actually substantially influences stock markets or financial markets in general. We will also talk about behavioral finance and psychology, different behavioral and psychological biases by investors, and how these different biases actually influence the stock market. We will also, towards the end of the semester, we will be talking about the futures markets and its instruments, such as future contracts, forward contracts, stock options, what we mean by put option, what we mean by call option, what are these, when they are used, etc. So the recommended materials, it's basically the fundamentals of investments. You need to have this book. Each student needs to have the book, the 9th edition. You will need to have the code the homework, the assignments, the quizzes, etc. Um, you will not be able to do them unless you have the code, and each student has to have his own code. You will not be able also to use another student's book or code. There will be assignments. There will be five different assignments. As I said, these assignments could be done through the McGraw-Hill website, and you will need the code to access and do these homework. As you all know, I'm talking now about engagement. The entire world is going through an exceptional and extraordinary time period in our modern history. We are going through this COVID-19 pandemic, which actually did not allow us to meet in person or meet in campus. In our finance department, we try our best to keep the same level of education quality, or to sustain the same level of education quality. To do so, we did introduce something that it's called engagement, in which students will be evaluated based on how much they are engaged with the course. The basic level of engagement is attending the lectures. So for attendance, and this is I'm answering the question that was asked, is to attend the lectures on time. So what I mean by time, it's basically the beginning of the lecture. If you are late a few minutes, this will be considered late. And if you are late 3 times, this will be considered as being absent. And if you are late more than 10 minutes, then that will also be considered as being absent. So if you have questions, I will address those after I finish reviewing the syllabus. And also, there will be an opportunity to maybe discussion is not highly relevant in our case. However, you will be also evaluated based on the time you spend using the McGraw-Hill Connect portal. So this the portal will give us the time that you spend on reading the book, and the time you spent on reviewing the relevant materials for the homework. So if you would like to have a hard copy of the book, that's totally fine. You can study from the hard copy of the book, but what I would suggest is, so you don't lose the engagement scores or grade, is that you do open the portal. While the portal is open, you spend the same amount of time reading from the book. So basically, that will also count towards your engagement. Regarding the quizzes, there will be 2 quizzes. There will be 20 to 25 questions in each quiz. I'm thinking of having true and false, multiple choice, fill in the blank, maybe short essay questions. These quizzes will be given in campus. You will need to go to campus to take these quizzes. Further details will be provided before the quizzes. There will be no makeup quizzes unless you have an official and formal reason for it. Exams, there will be 3 exams, 2 midterm and a final exam. The exams, the form of questions will be similar to what you will see in the quizzes: true and false, multiple choice, and fill in the blank, and maybe short essay questions. What I would recommend you is that this is my way. Whatever you see in the homework, it is going to be similar to what you will see in the quiz, and whatever you will see in the quiz will be similar to what you will see in the midterm. There will be. Let me just clarify this. I'm saying similar, not the same. So you will not see same questions, but you will see similar questions through the homework, quiz, midterm, and final exam. I don't want to have. I don't believe in surprises. Whatever you will see before should be similar to what you will see in the following requirements. So my recommendation is to spend a good amount of time doing the homework, understanding the concepts. If you have questions, please raise them as soon as you can. Don't wait until the night before the quiz or the night before the exams and you start asking questions. So if you have questions, please ask them as soon as you can. While you are doing the homework, you have questions, read the book, read the relevant materials. You will have 2 other resources. I think you are all privileged in this course. You will have office hours. You will have first the lectures. You can ask questions during the lecture and during the live lectures. And also you will be able to schedule a meeting with me one-on-one during the office hours. This will all be in the syllabus. And you will have 3 additional sessions per week. In the morning, Sunday, Tuesday, and Thursday from 10 a.m. until 10:50, as you all may know. My colleague Abdulaziz Al Nasser will be leading those sessions. He will be solving end of chapter questions, answering questions regarding anything relevant to the course, and also will be talking about the project. So I will tell you what I mean by project. So the evaluation criteria for this course, there will be 2 midterm exams. Each will account for 12.5%. There will be quizzes. All quizzes, all exams, whether midterm and final, will be taken in campus. There will be an important element or component for this course, which is investment project. You will have a hands-on and real experience on investing. As I said, my colleague Abdulaziz, inshallah, will be with us during the upcoming lecture. He will explain to you more about the project, and he will be guiding you throughout the semester in the morning sessions about the project. So I truly highly recommend you all to attend the morning training sessions. These sessions will be complementing what I give you here. There will be, as I said, solving end of chapter questions, guiding you through the investment project, discussing some financial news. I truly highly recommend you and encourage you to attend. We did talk about attendance, homework, and engagement, and there will be a final exam that will account for 40%. In terms of social justice statement, I adhere to the policy of the university and the education ministry, and this is what I believe in. You will be only evaluated based on your performance, not anything else. In terms of the academic integrity, I expect all of you to submit all of your work, whether it is a homework, exams, projects, etc. Should be your own work. I highly encourage you also to help each other. This is part of your learning experience that you learn from each other as well. It's not only you teaching you the course, but I highly encourage you to help each other, explain concepts to each other. But at the end of the day, whatever you submit should be your own work. Plagiarism, it's a crime, and it will not be tolerated. Regarding the project, you will be teaming up with another student. So the whatever you submit should be the work of both of you, not anybody else. I truly hope that you will invest in your entire education. This is part of your an important phase of your life. Whatever you invest in this time, inshallah, will pay off after your graduation, and you will remember what I say to you now, inshallah. But we need your cooperation to be able to prepare you to the next phase of your life. So this is the syllabus. If you have any questions regarding the syllabus, please let me know. وش السبب مشعل المدلج وش السبب ان الشباب ما استطاعوا انهم يدخلون؟ المحاضرة موجودة في البلاك بورد. آمل إن شاء الله أنهم يتمكنون. في tab, I created a tab in Blackboard called lectures. فأتمنى إن شاء الله أنهم يتمكنون من الدخول. قد يكون هناك إذا كانوا هم محولين اليوم ولا خلال ال 24 ساعة الماضية، قد يكون هناك تأخير في تحديث البلاك بورد. أنا محدثكم حصل معي نفس الإشكال، فهذه مشكلة قد تكون من البلاك بورد، إنه للأسف يتطلب ما بين 24 إلى 48 ساعة لتحديث الشعبة، ولكن المحاضرة مسجلة، فبعون الله مثل ما تشوفون هنا ترى المحاضرة مسجلة، فستكون بعون الله موجودة لهم للمشاهدة. طيب طبعا بالنسبة لسطام نعم يجب أن تشتري الكود. You have to purchase the code and it has to be the ninth edition, and you will not be able to use the other students' code because you will each code will be linked into a particular or a specific student. So it's linked to your student ID, and your grades will be taken from that code. So الكود هو تبع شركة ماجرو هيل. Basically this is the this is هذا الكتاب، هذا الموقع. You will see the book. فهو تبع ماجرو هيل. أي سؤال آخر؟ هل الصوت واضح إن شاء الله؟ إي نعم، إي نعم، إي هذا الكتاب اللي هو Fundamentals of Investment. راح إن شاء الله أرفع لكم السيلبس اليوم بعون الله لمن يسأل. هذا الكتاب لمن يريد إنه ياخذ سكرين شوت أو إنه يصوره، هذا هو. طيب شراء الكتاب موجود في مكتبة الجامعة، وأيضا موجود من خلال ماجرو هيل. للأمانة ما تأكدت من الكود اللي وضعه زميلكم خالد العريني، لكنه الكتاب موجود في مكتبة الجامعة وأيضا موجود في موقع ماجرو هيل. و I believe إنه there is a student discount. طيب بسم الله الرحمن الرحيم. As I said, the course, or as you know, it's essentials of investment course. So the basic and the most important concepts relevant to investment, it is risk and return. So in this lecture, I will start introducing the meaning of return and the meaning of risk. I will go through the slides. I will keep the last couple of minutes for questions. So in general, inshallah, during the lectures, we will have two periods in which that you will be allowed to ask questions. I will try to stop in the middle of the lecture to receive questions, and then I will stop towards the end of the lecture to receive the remaining questions. And as you know, there are office hours, and there are also morning sessions to address, inshallah, hopefully, all questions that you may have. So, since we did receive questions regarding the syllabus, in this lecture, it's going to be a short lecture. I will allow questions toward the end, and I did allow questions in text or texting for a reason. I did not allow the audio capability to ask questions because this may create some noise, and also asking a question by typing will allow you to think about the question and the way to ask the questions. And maybe some of you will be little hesitant or shy to speak up and ask questions. So it's I believe it is better to ask the questions by typing, and I will inshallah answer all of them. And we will see as we go in the semester if we feel it is better to allow the edu capability, that will be allowed, and during the office hours definitely you will be able to speak. So the learning objectives of this chapter, we will know how to calculate the return on an investment using different methods. So there are several methods to compute return. There are also different ways to express and present return. We will touch on those. We will see the historical returns on various important types of investments. And also, we will see the historical risks on various important types of investment, and the relationship, which is extremely important to know the relationship between risk and return. So let's assume, since this is a finance course, let's assume that you have an objective, a goal to be a millionaire. It may seem hard to attain, but the art of investment or the art of finance will allow you to achieve that objective easily, I would say, which is an important concept that you will learn in this course, which is the compounded return. So let's assume that you would like to have a $1 million, and you are able to invest 300 US dollar per month, so which is almost above 1,000 Saudi riyal per month, and you are able to earn 9% per year on those monthly investments. Let's assume also that tax consideration is not highly relevant, especially we are in Saudi Arabia. Maybe the tax consideration it's not highly relevant in our case, but for simplicity purpose, we will assume that tax is not an important component. So based on these, if you invest $300 per month at the 9% return annually, you will be able to have a $1 million in 36, almost approximately 36 years. However, let's say that you are able to increase that into a 500 US dollar per month, and you will be able to invest that at a 12% per year. You will be able to have a $1 million in almost 25 and a half years from now. This is not imaginary or hypothetical situation. This is real. You can do that. So I am assuming that you are at age of 20, 21 years old. So inshallah, by when you are 45 years old, you will have a $1 million. So we are talking about $1 million, which is 3.75 million Saudi riyal. So it's 3,750,000 Saudi riyal. This is something that you can do from an early age. This is something that you will benefit from, inshallah, in the future, if you really decide to do that and dedicate this monthly investment throughout all these years. And you may also think that the 12% per year, it's not realistic. It's actually realistic. It's if you look at the S&P 500 index, which is the index for the largest 500 US corporations, the average historical return was around 12%. So it is actually doable. So as I said before, the objective in this chapter is to look at the risk and return and the financial market history regarding those two concepts, risk and return. There are two key observations. There are two key or important concepts that we can see in financial markets, is that on average, and I underline this and emphasize on it, that it's on average, there is a substantial reward for bearing risk. So risk, there is a positive relationship between risk and return, which means if there is a high risk, there should be a high potential return, and vice versa, which means that if there is a high potential return, there should be a high risk. If someone would ask me how I can define finance, I would define it as that there is a positive relationship between risk and return, or we can say it in another way: risk and return go together. And we will see that very soon in the upcoming slides. So as I said, we will be learning how to compute return on different ways and using different methods, and then we will see how to express return on different ways. One of those ways is the total dollar return, or we can call it total real return, which is which is the return on an investment measured in dollars or in Saudi riyal, accounting for all interim cash flows and capital gains or losses. We will know what we mean by this once we solve the example together. So let's assume that on January 1st, you decided to buy or to purchase 200 shares of a company called Harley Davidson. Each share is for 50 US dollar. So you did invest 10,000 US dollar, which is basically 200 multiplied by $50, which is 10,000. And you have the following information. So let's assume this is the $50. Another way to express it, this is the beginning period price, and let's assume that at the end of the period, let's say it is December 31st, the price is 55.60. So you did invest 10,000, which is 200 multiplied by 50 on December 31st. This amount increased to 11,120, which is basically 200 multiplied by 55.60. And then you did earn, which is a dividend, which is the interim cash flows. You did earn 80. So to maybe I need to explain what dividend is. Dividend is the return that you receive on stocks. So let's say that a company A has a net profit of 1 million, 1 million in this case, $1 million, and they did decide to have a retained earning of 800,000. Retained earnings usually go back to the company to finance their projects, etc. And now we have a remaining of 200,000, and the company decided to distribute this 200,000 to its stockholders. And this is what we mean by dividend income. Another way to think about it, and maybe to link it to something that you may know, is that let's assume that you did purchase a property that has several apartments, and you decided to rent out those apartments. The rent in this case is equivalent to dividends. So what you receive from renting the apartments is equivalent to dividends. So the total dollar return on a stock, it's basically the summation of dividends income plus capital gain. In our case, the dividend income, which is 80, and the capital gain, which is the difference between the 11,120 and the 10,000. It's 1,120. So the total is 1,280 plus 1,120 is 1,200 or 1,200. هل الشباب السلايدات واضحة؟ أوه عذرا أنا آسف معليش، خلوني أرجع. آسف، أنا توقعت إنه السلايدات مفتوحة، خلوني أرجع. سأستعرض معاكم الأمور من البداية. هل الآن السلايدات واضحة؟ خلاص ممتاز. أنا أعتذر، أنا حسبت إني أنا I did share my screen with you. فخلوني أرجع بشكل مختصر جدا عن الأشياء اللي ذكرتها. فحنا الآن we did assume that someone would like to have an objective of having a $1 million once he retires or in the future in general. So to achieve that objective, you could invest $300 per month at the level of return of 9%. If this is the information that you have, this means it will take approximately 36.34 years, which is, let's say that it's approximately 36 years. Let's assume that another person will be able to invest $500 per month at a level of 12%, and we are assuming that tax is not highly relevant in this case. It will take you approximately 25.5 years. The 12%, it's a realistic number. If we look at the S&P 500 index in the past 90 years, it's the historical return is around 12%. هل يا شباب السلايدات واضحة؟ بس خلينا نتأكد. طيب أحمد, I will answer the questions. It's an excellent question. Please remind me of the question towards the end of the lecture. So, as I said, finance can be defined as the relationship between risk and return. So if there is a greater risk, there should be a greater potential return, and vice versa. If there is an increase on the potential returns, there also should be an increase in the risks. So if we would like to define finance in one sentence, we could say that risk and return go together. And we will see that shortly. I did explain this example. Let's assume that we, as I said, we are going to define return on different ways. So one way to define or to compute return is the total dollar return, or we can call it total Saudi Riyal return, which is the return on investment measured in dollars, accounting for all interim cash flows and capital gains or losses. So an example is for that, let's assume that on January 1st, you purchase or you buy 200 shares of Harley Davidson company, or a company A, or Sabiq, or Al-Rajhi, or whatever, for $50 per share. So 200 multiplied by 50, this is a $10,000 US dollar investment. and we have the following information. So ending stock price. So in January 1st, this is called the beginning period stock price. And let's assume that we are doing this over 1 year. So in December 31st, which is the ending stock price, this is beginning stock price or beginning period stock price. It's 50, and the ending stock price it's 55.60. So it did go up by 5.6 dollars. So the investment, as I said, it's in January 1st. The entire investment, its value is 10,200 multiplied by 50. In December 31st, it went up to 1100. To 11,120, which is 200 multiplied by the ending stock price 55.60. So the dividends, it's 80. I gave you the example of renting out a property, and the how it is similar to the concept of dividends, which is the interim cash flows, what you receive during the period. The capital gain, which is the difference between 11,120 and 10,000, which is 1,120. The total dollar return on this, which is the dividend income, which is the 80, and the capital gain in this case or loss. In our case, it is a gain because the stock price went up from 50 to 55.60. So it's 1,120, and the total is 1,200. Another way to express this is in percentage. So what we did is we did express this based on the total investment. However, let's say that we would like to know the total percent return on each dollar or Saudi riyal invested. So we do repeat the same numbers. So we say that it's the dividend income plus the capital gain. However, this is based on each stock. So it's we say that the for each stock the price went up from 50 to 55.60, which is 5.60. And the 40, it's the 80 divided by the number of shares. In our previous example, it's 80 divided by the number of shares, because we are looking at each share or each stock. So it is 0.40 divided by the beginning period. So let's say that someone would ask you, okay, you did invest in Harley Davidson stocks. How much return you made? So you could express this in two ways. You could say, okay, well, I made 1,200 US dollar in my entire investment. Or you could say, well, I made 12%. So this is another way to express return. This is a very similar or a same example to what we have already discussed. It's basically repeating the same concept in how to compute total dollar return, and also in how to compute the total percent return. I let me go over the example just to make sure that you all understood the two concepts of total dollar return and percent return. So let's assume that you invested 1,400 US dollar in a stock with a share price of 35. 35, it's the beginning stock price, or the beginning period stock price. After 1 year, the same stock price went up to 49. So it did jump or did increase from 35 to 49. 49 is the ending stock price, or the ending period stock price. And let's assume that for each share you received $1.4. So the $1.4, it's equivalent to what we have here as 0.40. So this is for each stock. So, however, we have a missing information that we don't know how many stocks that we did buy. Now we would like to know the total dollar return. First, we would like to know how many shares we did buy, which is basically dividing how much in total that you invested by the stock price for the company that you did purchase. So it is 1,400 divided by 35. So we know that we did buy 40 shares, and the capital gain basically it's 40 multiplied by 14. 14, it's the difference between the beginning stock price and the ending stock price. So the difference between the two, it's the capital gain because it's the price increased. So if the price went from 35 to, let's say, 25, this will be called capital loss. Capital gain because the price increased to 49. So it's 40 multiplied by 14, it's 560. And the dividends, it's 40 multiplied by 1.4. 40, it's the number of shares, multiplied by the dividends. This is 56. So the total dollar return, it's basically the capital gain plus the dividends. So 560 plus 56, this will sum up to 616. And then for the percent return, so we are computing this for each stock. So it's the dividend part, it's 1.4 divided by 35. 35 is the beginning period. So let's go back and link this to what we have. So we have here the formula, it's total percent return. It's equal to dividend income plus capital gain divided by beginning stock price. Mathematically, you could divide this fraction into dividend income divided by beginning stock price plus capital gain divided by beginning stock price. Or you can do it this way. So now we did learn how to do it both together. And on the other example, they did divide it into two different fractions. First, for the dividend yield, which is 1.4 divided by 35 US dollar, and 14, which is 49 minus 35 ending stock price, beginning stock price, divided by the beginning stock price, which is 40%. So we do sum both percentages, and we have 4% plus 40%. This is 44. So the other thing that I wanted to also mention is now we need to find a way to standardize the way that we present or express return. So let's say that you are you did sit down with a friend of yours, and he did say, "Well, I have a good investment opportunity for you. If you invest in investment A, you would get 6% in 6 months." And another person did say, "Well, I have another investment opportunity for you. If you do invest in investment B, you will get 4% in 4 months." So now we have two percentages, two different percentages, but in the same time we have two different holding periods, or two different time periods, one for 6 months, the other one for 4 months. So it is really not straightforward and easy to compare both returns, because the periods are different. One way to resolve this issue is to express return on annual basis. This is why I'm trying to explain to you the motive on why we are interested in finance to compute annual return. So this example of Cisco company, it's at $30 per share. After 3 months, you did sell the share at 31.5. So there is a capital gain. The way to compute the and also they said here that you received no dividends, so there are no dividends. So what is your return, and what is your annualized return? So first we need to compute the return. The basic formula to compute return is the price at the end period, or T plus 1, minus the price at the beginning of the period, or at time T, divided by the beginning price, or beginning period price. So once we apply this in our example, we know that after 3 months, 3 months later, which indicate that it's the T plus 1, so the ending period price, which is 31.50, minus the beginning price, which is 30 divided by 30. This is 0.05, or we can say it is 5%. You just multiply this by 100 to express it in percentage. So the effective annual return is the return on an investment expressed on an annualized basis. So let's see how to, so we did solve this part of the question. Let's see how we can solve the other part of the question, which is, what is your annualized return? So the formula for computing annualized return, it's 1, this is 1 plus effective annual return equal 1 plus holding period percentage return to the power of m. M is the number of holding periods in a year. We will go through this and you will understand it, inshallah. So in this example, the holding period is 3 months. So we said here 3 months. So how many 3 months in 1 year? So we just divide this by the number of months in a year. So it is 12 months divided by the holding period. In our case, it's 3 months. So it is for 3-month holding periods. This is the number of holding periods in a year. So in our case, M is 4. So it is the 12 months divided by 3. This is 4 holding periods. So now we have all the needed component to compute the effective annualized return. 1 plus effective annualized return, we'd like to have this, equal to 1 plus the holding period percentage return, which is what we computed here, to the power of M, which is the number of holding periods in a year, which is 12 months, divided by 3 months. It's equal to 1.2155. To have the effective annual return, we take the 1 to the other side of the equation. So it's 1.2155 minus 1. This is equal to 0.2155. If you would like to express this in percentage, you multiply this number by 100, and it will be 21.55%. I will go through 2 charts or 3 charts, and we will end this lecture, and I will be answering your questions. So we did say that we did mention types of investment. We did also mention relationship between risk and return. We say that there is a positive relationship between risk and return, or risk and return actually move together. So if there is a higher risk, there should be a higher return. Let's take an example. This is a real example. Let's say that you did invest $1 in 1926 in different types of investments. We have stocks, we have bonds, and we have bills. Stocks, it's أسهم. I believe you know what that is. This is a sort of ownership of a company. Bonds, it's a fixed income investment. It's a debt. So the company would promise you a certain level of return. And the difference between bonds and bills, bonds, the maturity of bonds, it's above 1 year. So the maturity of the debt is above 1 year, and for bills, it's the maturity is below 1 year. So we can see that if you invested $1 in 1926, in 2016, so it's almost 90 years, the small company stocks would grow from $1 to 29,781, whereas the long-term bonds would grow from $1 to 129. So we see that there is a huge gap between the two. Why do we have this gap? The main justification or reason is there is a different level of risk between bonds and stocks. As I said, for bonds, you are promised a certain level of return. So with a high certainty, you know that you will receive this particular amount in that particular deadline or maturity date. Whereas in stocks, you are taking a risk. So the stock price may go up or may go down. So there is a higher risk. That's why we see also a difference on the return. I need also to mention that inflation is not a type of investment, even though there are some advanced way to invest in inflation, such as inflation swap, etc. But this is a way advanced concept. But the concept of inflation is really important in any investment. And we will touch on that in the future. But we need to know the return above the inflation rate. And that may be a concept that you did learn in your macroeconomic course. This is linked into the purchasing power of your return. This is a similar concept. If you do invest, let's say that you did, this is a hypothetical situation. Let's say that you did invest in 1816, $1. I know that it's 200 years. It's not realistic. However, if we think about it, that it's a company that did invest, not a person. So a company could live for a very long time. So let's say that you invested $1 in 1816. It will go up to 28.56 million dollar in 2016, whereas for bonds, for instance, it will go up by 42,000. The main reason why we have this huge gap, and we are taking this into the extreme just to show the concept, is because of the difference in risk. This is what I have to you for this lecture. I don't want to give you more. Inshallah, we will gain momentum during the semester, in which I will be explaining more concepts in each lecture. Please, if you have any questions, let me know. Let me start by answering the question that Ahmed Al-Baib did ask. Is that an example of a passive income? Ahmed, ذكرني, when did you ask this question? طيب. Okay. On the dividends. طيب. Let me touch on the concept, and I will answer your question on the passive investment. This is not a passive investment. This is the short answer. So you buy and you sell. There is two types of ways to invest. There is an active and passive. Active means that you do your own analysis. You buy and you sell. You try to time the market. You use your information and your analytical ability to analyze the different stocks, and you sell and buy. Passive investment, it's if you, let's say that you invest in a portfolio or a mutual fund, in which that there is no, the portfolio is actually mimicking something else. So let's say that you did invest in an index portfolio. An index portfolio, it's actually just following the movement of an index. So you don't actually interfere on that particular portfolio. There is particular rules. There are particular rules or algorithm that is driving the investment. So in general, once you see an investment in which a person buys or sells a particular stock, this is an active. This is an active investment. Basically, this is the formal way to look at passive or active investment. And also, maybe you did not. I'm not sure if this is what you meant. Maybe you do mean by passive investment. There is a difference between investment and speculation. Speculation is mudaraba, so you sell and buy and sell and buy, and you try to. Most of your gain is coming from a capital gain. So the price goes up, you sell. The price goes down, you buy, etc. So most of the return that you gain is coming from your capital gain. Rarely you will have a return that is coming from dividends. Whereas an investment, it's as we did explain. So you do buy a particular stock and you keep it for a certain period, in which you will be influenced by the movement of the price, and also you will receive the dividends paid on that particular period. Any other question?